Running a retail business is tough enough without tax issues adding additional pressure. In this episode of Empowering Retail, we're talking to Inland Revenue to unpack the most common compliance pitfalls that retailers face, how to manage tax debt early, and why using IRD as a cash flow solution can quickly backfire. Kia ora, I'm Carolyn Young, Chief Executive of Retail NZ, and today I'm joined by Andy Evans, who's the Group Lead at SME's Customer and Compliance Services with Inland Revenue. Welcome, Andy.
Kia ora, Carolyn. Good to see you, and thank you for having me.
Oh, look, it's a pleasure to be here. Look, we do know that often people aren't the best fans with Inland Revenue. We all have to pay taxes.
Absolutely.
But I guess, what we know is that it is a challenge sometimes for businesses to work out how to manage their taxes. And from your perspective at Inland Revenue, what are the most common compliance issues you see with small and medium retail businesses, and maybe what are the sort of warning signs that a retailer might be slipping into non-compliance without realising it? What should our retailers be thinking about?
Great question, Carolyn. And look, it is fair to say that most of the compliance issues that we see in the retail space or the retail sector are not necessarily driven by poor intent. More often, they arise as businesses grow and change, and these systems and processes do not necessarily keep pace. Inland Revenue, we work with thousands of small and medium businesses and retailers alike each year, and as a consistent theme in non-compliance often develops gradually and without the businesses realising. One of the most common issues we encounter is income not being fully recorded. This is frequently linked to point-of-sale systems not being reconciled regularly, differences between reported sales and amounts received to bank accounts, and multiple payment channels such as FPOS, online sales, and third-party app platforms not being brought together in a single, consistent view. In essence, put simply, if money's coming into a business, Inland Revenue would expect to see it reflected somewhere in those business records. With GST, some of the common issues include businesses not registering once their turnover exceeds the registration threshold, as well as the understatement or underreporting of taxable supplies. We operate in this environment and we recognise that retail can be a challenging operating environment, often characterised by high staff turnover, the use of casual and part-time workers. In that context, for your retailers, we regularly see compliance challenges relating to PAY errors, incorrect treatment of contractors, and payroll systems that have not necessarily evolved as the business has grown. Another issue where compliance issues can arise is the lack of clear separation between business and personal finances. So this can include where personal spending runs through the business accounts, owners' drawings are not clearly tracked, or expenses become difficult to classify accurately at the year end. So some basic early warning signs for retailers to watch for can include sales and cash flow not aligning as expected, GST obligations becoming stressful or rushed, and with great outcome as well where the business grows, but unfortunately the systems and processes remain unchanged. Look, as I previously said, we recognise that retail is a demanding environment. Compliance issues typically start small, a system that's no longer fit for the business, or a process that has not kept up with change. Identifying those early warning signs provides businesses with options and reduces the likelihood of those issues escalating.
Look, I think when you think about a retailer, often, especially in a small business, if they've just started up, maybe them and one or two other staff members, being able to reconcile your income is really important, right? So I guess if a retailer doesn't have those skills when they set the business up, it's how they work with someone that either does that for them or shows them and teaches them how to do it so that they can manage that and do that reconciliation regularly. The longer a reconciliation is left, the more difficult it is to reconcile your numbers. So I think always getting into those things early and understanding when you need to implement new systems for things like payroll as you grow.
100%. Look, I couldn't speak highly enough of seeking professional advice where it's required. The role of small business or retail is to master and promote their trade. They're not necessarily confident with bookkeeping or financial record keeping to ensure tax compliance. So where there are issues, definitely encourage people to seek professional support, guidance and direction where necessary.
Yeah, that's great. Thanks, Andy. And look, if a retailer's starting to struggle with tax debt, which, last thing we want to see, but what's the best thing that they can do early on as soon as they've got concerns, because I know that you probably see a lot of businesses where they're making similar mistakes, and what turns into maybe what could have been manageable could be something that ends up closing the business down.
Very, very topical in this current environment. This really is quite an easy one. Set up a payment plan. Set up a payment plan to pay it off over time. Make contact with us at your earliest opportunity. We work strongly and closely with a lot of small businesses, retailers, to set up installment arrangements. You don't even need to talk to us about it. So, the functionality through logging in through My IR, the online portal, creates an opportunity for taxpayers to set up installment arrangements when they notice that they've become behind with some of their payments. Working through the My IR to set up the installment arrangement, you just have to work out and say how much you're going to pay monthly. And if by all intents that it calculates over a period of time that it will be paid off in a reasonable period of time, it's automatically accepted. You won't have any more late payment penalties. So as long as you make those regular payments, you'll still have interest to pay, though. Unfortunately, there's no such thing as a free lunch or free money. And seriously, don't miss those regular payments. If you do start to miss those regular payments that you've agreed through the instalment plan, late payment penalties that were skipped will then be added back on. Alternatively, if you're simply unable to pay the debt, even with a payment plan, get in touch with us as soon as possible. We do have some ability within the law to take your financial hardship into account when seeking to recover your debt. And the sooner we can talk together about the options you have, the better it's going to be for you. Look, leaving it too long and it will just become a mountain of debt that we can't help you out of.
Yeah, look, we've all seen the media reports of various businesses that have closed, and the Inland Revenue debt is often spoken about. So I think
Yeah.
if you do have concerns around your ability to pay your taxes, get in touch with the Inland Revenue straight away. And as Andy said, try and get in place a payment plan that you can achieve, and then get yourself back on the right footing. The longer you leave it, the more penalties apply, the harder it will be to replay. So please get onto those things as soon as possible.
Absolutely.
Some businesses using inland revenue like a short-term lender by filing or paying late because of cash flow challenges. Doing this would be quite risky, right? What would the costs and consequences if someone is consistently paying their taxes late?
Yeah, look, I don't think many businesses deliberately try to treat us like a bank, but understandable when cash flow pressure is on, that temptation not to pass or pay GST or PAYE arises, and instead, paying other suppliers or staff. And we get that temptation can be high. It is, in essence, a bad idea for a few reasons. Firstly, it can be really expensive. As a taxpayer, you'll get penalties and interest from the first day of that missed payment or regular thereafter. And those penalties can compound quite steeply. So, for example, a $10,000 PAYE payment that's missed, and if that's not paid or you don't manage to pay that for a year, you'll find yourself with more than $23,000 of debt to deal with. No bank is going to charge you anything like that amount of interest. So, we are very, very expensive for taxpayers. So instead of missing your tax payments, talk with your bank about a short-term loan. In essence, it's a bank's job to help you through with cash flow problems, not our job, unfortunately. Secondly, and look, I can't stress this more enough, PAYE is actually your employee's money, and you're just passing it on to Inland Revenue. If you hold on to that to pay other people, it is a serious offence that we do treat very seriously. We don't take that lightly, and unfortunately, neither do the courts, and neither should you. You shouldn't spend someone else's money. You wouldn't do it normally, so why would you do it in this situation?
Yeah.
GST is a little different, but it is still in the same ballpark. The intention with GST is it's a tax that consumer is paying at the end of the day. It's their tax, not yours. You're just passing that money along on the way. Most of our tax debt is from PAYE and GST. Yeah, it's not good. And finally, the human aspect, the stress involved. When you've got a tax debt, you know that we're going to be looking for it. And we do have options like taking it out of your bank account, reporting you to credit agencies, or prosecuting you through the courts. When that's hanging over your head, it's hard to concentrate on your business, which is the thing that you need to be doing. So talk to your bank rather than holding on to your tax payments. You might think the bank won't loan you the money, but you don't know until you try. And it will be a lot cheaper than missing your payments to us. And look, if the bank won't lend you or loan you the money, that might actually be a good sign that you really need to consider whether your company is still viable. If the bank doesn't think so and you can't pass on to us money that isn't yours in the first place, they're two pretty good things that you need to pay attention to.
Look, it's pretty serious stuff, obviously, but if there's one message that you'd want to leave every retailer to think about today around tax compliance, what would that one thing be?
We actually want business to succeed. Yeah, it's good for New Zealand. It's good for our tax collection in the long run. Yeah, we do want to work with you to help you through the hard times, but as you know, we can't do that if you're not talking to us. Yeah, and look, just chuck in a real, obvious one here that we've previously mentioned. Really important one: never miss PAYE payments. It doesn't end up well.
Look, thank you so much for joining us today, Andy. It's been a real pleasure to speak with you and hear about how retailers can keep on top of their tax obligations. A couple of takeaways I had from today was one is, if you're starting to struggle, reach out to the IRD straight away and get a tax payment plan put in place. If you need cash flow issues, go to your bank and see if they can help you. Don't use PAYE or GST for other purposes other than paying the inland revenue. And hopefully, if you can do all of those things and keep your systems and processes up to date as your business grows, you'll be just sweet.
Absolutely.
Yeah. So thanks again, Andy, and I look forward to catching up again.
Awesome. Hey, thanks you, Carolyn. It's been a pleasure and nice of you to have me here today. Thank you.
Look, I hope everyone enjoyed this episode, and don't forget to visit ird.gov.nz, so ird.govt.nz to find out more. This was part of our Empowering Retail series, your go-to resource for short, actionable insights to take your retail business to the next level. Don't forget to subscribe, and until next time, ka kite anō. Bye for now.